Hello everyone, I'm Stan and I welcome you today on the streaming session from Exness. Today we will be going through the markets and watching opportunities which are available right now, possibly for trading. So let me introduce myself. I'm Stan, I'm a senior trading specialist here at Exness with a trader with experience for over 20 years right now. And this time I will be giving you some insights and ideas, not suggestions, here at this streaming channel. Alright, so we have chat here. I remind you that we have chat here from time to time. I will refer to your questions in chat, so if you have any questions, I will be more than happy to answer. And feel free to drop your questions. All right, so hello guys. We have our members who are constantly, our traders who always in chat. It's nice to see here. Alua, Jimmy, Keshav, Rai, hello guys. So what's your take on Australian dollar versus JPY? All right guys, so be patient please. So we'll go through your questions very soon. All right, now the streaming time. And without further ado, let's go straight to preparation. All right. So, let's go to economic calendar in the first state and try to prepare for this week and to understand what will. Sorry, one second. I will adjust my. All right, I think now it's better. Now you see my economic calendar. All right, so very quickly, let's go through economic calendar and see what's going to pop up this week. So speaking briefly, the main publication, the main event, which is absolutely crucial, is US inflation rate, which is presented in the form of CPI, Consumer Price Index, the core inflation rate, monthly basis, yearly basis. So many aspects that are important. So basically this is the one and important inflation benchmark. No, it's not the only one, because there's also PCE index, personal consumption expenditure index, which is also published. Basically that's usually the third week of the month. US inflation is usually the second week of the month, right after NFP publication. So why is that important? Because Federal Reserve, the Central Bank of the United States, basically relies on two things: employment and inflation. So that's what they tell exactly. So our goal is to maintain price stability and the maximum employment for American people. That's what Jay Powell says. So that's why markets are constantly watching two main publications. So NFP, which is the first Friday of the month, and inflation, which is CPI, and the second week of the month, usually second week, sometimes it's the third. All right, so let's check it out quickly. So what are expectations of the market? So expectations of the market is that we got 0.3% overall inflation rate growth. So that's not too low. Okay, if we click here at this chart, we will see that there were recession fears that it will actually drop, or maybe the growth will become negative. So that would be the deflationary indicator or recessional indicator. But that's probably not going to happen. So this time it's probably will jump again to 0.3. So this watermark, as you see. And that's okay. And markets usually don't believe, markets don't believe in the interest rate decline anytime soon, at least in summer. Just take a look at the FedWatch tool again. So this is the tool which is available on the Chicago Mercantile Exchange website. And here it is. Just take a quick look. June, okay? In June, 91% of traders are aware that there won't be interest rate decline. In July, so for example, speaking of July, 61% of traders are not discounting any interest rate decline, and only, I think, July. That's July, and then September. September, already 53% of traders are discounting for interest rate decline for one step, basically. So you see that the hawkishness of the market, the overall hawkishness, is substantially greater. All right, so currently, but what are main narratives for the upcoming week? So why do we need to understand the narrative? Why it's so important? Why are we not going straight to charts and try to find technical patterns, guys? Because in order to understand that, if you find the narrative, for example, the latest narrative from the previous week, if you watched the previous streaming session, there was a sell safe haven assets, right? So we've been pointing out that the market will be distributing gold, yen, and Swiss franc, and similar assets that were serving as a safe havens. So as a result, as you see, what happened last week? So we've been pointing out this narrative very clearly, right? So our bullish trap was working just as we projected on the stream. Here it is, by the way. So let's remove unnecessary indicators and scenarios to prevent you from being biased. So here it is. This is the bullish trap that we've been waiting for. So you could have shorted here or here at the pullback, right? Why is that? But that's not a technical situation. That's not a technical picture. That's the narrative analysis picture. We've been pointing out that the selling of safe havens is the dominating narrative in the market. Now it's probably over. Why is that? Because, well, first of all, we've got the news from the politics, right? So Donald Trump and China, so they reached some agreements about the trade deal, so for 90 days. So the uncertainty is a little bit eliminated from the market, and there is no point in selling safe havens so massively. All right, so safe havens are not being sold so massively this time, and that is the point. So what is the current narrative for this week, probably? Well, currently market is being balanced a little bit, so it's becoming balanced. But in order to understand the capital flow, so where the capital is flowing, where the capital is going, let's try to watch the bond markets in the first place. So for example, so let's watch the yields of UK bonds, for example. They're consolidating, but they're going up a little bit, so meaning that the bond prices are declining, so that supports British pound to some extent. The Japanese yen is declining, so yields of bonds of Japanese yen are declining, so you see this decline, so it's not that substantial, it's some kind of a noise, it's peaking, so it's still at the peak. But currently the easing of the market is visible, the easing of the market is obvious, right? You see that the peak was at May 12th, which is yesterday, beginning of the week, Monday. So yields are declining. So the bond market is, rising a little bit, so which pressures the yen, okay? That pressures the yen. And the same time is visible with 30-year bond yields, treasury, 30-year treasury yields. Okay, if we put it here, if we click the first link on CNBC, sorry about that, we see that 4.8% is current yield, but what we care about is dynamics, so where the capital is flowing. You see that the yield is going up a little bit. So it was, for example, as low as 4.6% at the end of April. Now in middle of May, so it's going up. So basically that's some kind of support of American dollar, a little bit of a support of American dollar. So for that purpose, what I see here, I see that the sell American narrative is no longer dominant, and the American dollar is retracing. So I think that the current trend or the current narrative for today's market is the rebound or the comeback of the American dollar, because of several factors. First of all, we have some tightness of monetary policy, right? You've seen the Fed Watch tool, you've seen the probabilities. The probabilities are going up, probabilities of interest rate hike or interest rate capped at the same level. They are going up for several interest rate decisions for July, for June, for example, even for September. So they're moving up, and the yields of bonds are moving up too. So in other words, the American dollar becomes, currency with a greater yield, and money gets back to the American dollar as geopolitical tensions resolve to some extent. So, and as a result, we see some support for American dollar. So all that we trade this week, all that I will trade this week, probably I will be inclined to buying the American dollar maybe against the yen, probably. I think that against the yen would be the best scenario, because yen is a safe haven. So you are buying the American dollar and you are selling the safe haven. So can you sell gold, for example? Well, I don't think that gold will be necessarily selling under selling pressure. I don't think that it will be moving down substantially because of its rising trend, because it was supported by strong institutional demand. I don't think that gold will plummet down substantially. So speaking of gold, so it's also the safe haven asset. It's quoted against the US dollar, but it has the independent dynamics. So last week it was the good idea probably to sell gold, but this week that's no longer, I think, that obvious. So gold had touched the lower band of the Bollinger Bands with the 20 parameter, which is the possible lower band, lower boundary of the trading range. Okay. So with that, you see that we had the exact retest here. So I think the road to building another leg to the upside is open. I don't see that. I don't think that this leg will necessarily lead to the taking the new high very quickly. So it might work like that, something like that. So absolutely not very aggressive. But as for gold, I will be probably pursuing for finding a long trade for this week. Though it's pretty not that obvious, because you're going against the flow, right? If you buy gold, you're going against the flow. The flow still is the American dollar. So if I would prefer what to do in this market, I will probably buy American dollar versus yen. And that is why. So first of all, the geopolitical resolution. So money gets back to America with the trade deal negotiated. Secondly, we got increase in yields for government bonds of the United States, for treasury bonds. Then we got probabilities of interest rate kept at the same level, increasing. So that all that supports the US dollar, basically. So that's why my preferred trade would not be gold this week, even though if you guys trade gold, you absolutely can do that. So just take a look at how it worked in the past, for example. Whenever the price touches the lower band of the Bollingers, so you might try to pick something like that, maybe 2 days up, well, not a huge deal probably, so you may work until the price reaches the 20-day moving average, so which is here, not a huge target, maybe it's gonna be like $50 target, so you gotta be very precise in your trading, so put pretty tight stop loss on something like that. Maybe it's gonna be tomorrow, because I don't know. So today it's gonna be publication of inflation. So you gotta be careful about volatility. So let's put, by the way, here economic calendar. So here it is, inflation rate. It's going to be published, well, I guess in a few hours. So you got to be careful about that. But maybe tomorrow market is going to go up and reach the 20-day moving average. So that is potential gold trade. All right. But I think that the more interesting situation is building here, because American dollar was oversold massively. So and here we got the very strong order flow. The yen is selling against the dollar, the strong order flow. So you see that it was going up and up, another upswing. So we are in an upswing here. The trade location is not super good, because you see that it's right at the top of the Bollinger Bands, right, exactly at the top. So if we go back in history, we see that there are a bunch of situations, even in a strong market, when the market was retracing out of the strong move, but still it was retracing once reaching this area. So that's why I think that it would be good actually not to jump in immediately, but maybe to wait until for some kind of consolidation or correction, maybe, and then only then to enter the position. So you got to be patient, guys. So patience pays off in trading. Something like that, okay? Something like that. Another one, by the way, another opportunity which I've been pointing out is Euro-Yen, because Euro-Yen is balancing right at the top of the massive formation, as you see. Massive formation. So the longer this formation is, the more aggressive the breakout may be. So I will point out a couple of interesting opportunities here. So first of all, you see that yes, other than we've been building this formation for a long time, since August previous year, so already 8 months ish. You see that the ATR indicator is moving down, so it's close to bottoming, to establishing the new bottom. So it's very close here, right? And usually that's associated with the market ready for the next big move. It might not be the move up necessarily, it might be move down, shaking down and moving up, something like that. So we don't know exactly in which direction it will go, but the closer the market is to the move, the lower the volatility. So we should take this into consideration. Well, I do think that we have some chance of yen actually. So if yen will continue moving down, which is questionable for right now, but if it will continue moving down, so we got a pretty interesting, pretty promising trade location here. So the position of the price right at the top of the trading range, right at the top of the, so it has established the new peak yet too. So it's moving in a strong order flow. So as you see, it's moving 1, 2, 3, 4, 5 days up. Okay. Previously, it was just consolidating. There was no very strong order flow, but still some sign of strength were already visible in this market. Just take a look at these impulses. 1 and 2. All right. So then consolidation and 1, and now we are moving in another one. So of course, the better situation would be to wait until the price retraces back to the 20-day moving average, and to time your trade out of this area. I think that would be the best one. But actually, so we are already on the move, so it might not happen. So there is some possibility that market will go with a big candlestick up without touching this 20-day moving average. And if that happens, so that will continue moving up in a 1 or 2 weeks perspective, because market will never get to support anytime soon. So this type of behavior is also expected, because I think that with the yen is on the verge of falling, because yeah, even though it has peaked, the yields of bonds of Japan, they have peaked, inflation in Japan probably have peaked. So this situation might potentially unfold like that. So yes, if you want to enter the position, so what would you do in this case? You would like probably to enter pretty early, right? If you will wait until the price will touch the 20-day moving average, that might be probably too late. But yeah, you can also do that. But I think that we are in an interesting situation, interesting position right now. Right now, so market might be on the verge of breakout. Not necessarily it would happen, but it might be on the verge of the breakout. So the trigger point, or trigger event might be the inflation publication. All right, so how exactly could we play this situation? Well, you see that we have a small trading range, which might be called a coil, or it might be a triangle or pennant, whatever it is, by the way, so it doesn't really matter. It doesn't really matter. So I think that the best course of action would be to wait until the volatility pops up. If volatility touches this lower border of the range, so we might position ourselves to the upside, because that might be the indication that the price had shaken off the buyers, the buying activity, and now it's ready to move up. Another one, of course, is the breakout. So if you play the breakout, so once the price goes to the opposite side of the range, you might place a buy trade with some stop loss, but you should be aware that momentum breakout trades, they are not very successful in terms of statistics. In other words, out of 10 trades, only 2 or 3 may work out. Other trades might be whipsawed with a stop loss, so you might get a stop loss pretty quickly. That's not a bad thing, because At the end of the day, what matters is how much money do you make on the good trades and how much money you give away on the trades that don't work. So that matters. But I prefer to use bearish traps, bullish traps, the situations when the market shakes off out of the range, then retraces to the range. So I think these situations are much more interesting in terms of asymmetrical trading opportunities, much more interesting in terms of understanding the asymmetry. So you place more smaller stop and you get the greater potential gain, and the statistics of such patterns is better. So I mean that if you take the shakeout, the market retraces, so you place a trade, the statistics is on your side. Actually, the market probably will return to the upside. So that's exactly, by the way, what happened not so long ago, last week, I mean on Friday, right? So the market was consolidating, then boom, so it was just retesting the lower boundary of this small formation. So that's a potential long entry. So you see, that's exactly how it's playing out in this market. And then it's moving up. The same situation might happen here. So if it tests this level, if it gets back, so that might be the potential entry point. And if the price accelerates, that will be a perfect trade. Maybe you can make the yearly profit out of that. Well, I'm just kidding. I don't know. What's your profit, guys? What are your I would say, expectations? All right. Nevertheless, so don't forget that this is just the idea, right? That's not an investment or trading recommendation. So always use your own discretion and be skeptical about what anyone says on the internet and anywhere else. All right. I will read comments, guys. I will get to comments from time to time. So where are you from? Where are you watching this streaming session? Tell us, please. Uganda, right? We got people from Uganda. Hello. All right, Oluwa, what's your take on Australian dollar versus yen? All right, so we will get to this in a minute. All right, as for euro yen, so I think that this situation is pretty interesting just because of two factors. So let's sum it up. So first of all, it's consolidating, the long consolidation, which lasts since August 2024. It's starting to bounce off this, or it's starting to try to break this consolidation now. So it's testing the waters, it's testing higher levels. So no guarantee that it will break, of course, but if it breaks, the breakout might be aggressive. And the ATR, the indicator of volatility, is moving down to the new bottom. Usually that's good for the beginning of the trend, right? And another one is that safe havens are no longer in the market. So risk premiums are being eliminated from safe haven assets, such as gold, such as Japanese yen. Gold is another story. It has other value other than safe haven. So because it's an investment vehicle, it's an independent investment vehicle. It's been accumulated for a long time by institutional market participants. So we don't touch gold for selling. We've been doing so last week, but this week we are not touching gold for selling. But this week we might think of selling JPY, for example, against other currencies, especially against USD and especially against Euro. As for Australian dollar, for example, versus yen, so let's take a look here. It's retracing, as you see, pretty massively. It's retracing, so it's standing right at the top. All right, let's take a look. First of all, it's in a strong impulse, so I see why the situation grabs your attention, right? Because it's in a strong impulse. You want to buy at the peak. I don't think buying at the peak is very good. Because usually, so if you take a look, just take a look, it's just right above the Bollinger Bands, right above here, right? So above the 20-day Bollinger. So 2 standard deviations. Just let's look back at the history, how frequently the situation turned into a profit, turned into the move. For example, here, the pullback, right? So let's recall any situation of the strong trend in the past for this particular instrument and see how frequently the situation worked out. Here it's the peak, peak, peak. Here was the 2 days of continuation, 3 days of continuation. Then we got pretty decent continuation here in June, okay. Then we got again, so here we go again. So that was the peak, the peak, the peak, the peak. So 80% of situations, so this market is peaking. That's not a momentum instrument. I mean that just if you look back at the history and see it with your own eyes, that's not a momentum-based instrument. What do I mean by that momentum-based? Some instruments are fast enough. For example, crude oil. I will show you just an example to consider. The crude oil is different. So once it sustains the move, usually it extends the move for several days, you see? So very rarely it pulls back quickly. This same instrument, right? I mean the same pattern. Once it touches the upper band of the Bollinger Band, so it continues to move for usually several days in a row. And for gold or for crude oil is 50-50. It's 50% of the time it's going up, 50% of the time it's staying in the range. So I guess that's pretty decent statistics. As for Australian dollar versus yen, so statistics is not that good. So I mean 8 situations out of 10. It's the peak of the market. So if you want to jump in here, so that probably would be your peak of the market. Well, is it good to jump at the peak? Well, that's not. So you can try to do that if you have a short stop loss, for example. But you should be ready that your stop loss should be captured in this case, or would be captured in this case. For example, you enter the position, that's peak, and that's it. It might not be stop loss. Don't get me wrong, it might not be stop loss, so you might get some profit out of this trade, get a break even, stop loss. You cannot lose money here, but that might be the peak. If that's the peak, what's the point of entering the position if you enter at the peak? I don't know. I don't see any point here, to be honest. What's your take in pound yen? All right, let's watch pound yen. Pound yen as well as euro yen might be potentially interesting. So it's almost the same mirror situation, almost symmetrical. You see what's going on here. The price was declining. The ATR was declining. It's establishing the new bottom. So that's the cyclical pattern. That's the market is ready to move. Not the fresh trend, right? It's not the fresh trend. The swing itself had started several days ago. It had started on May 6th. 1, 2, 3, 4, 5, 6, 7 days. 7 days up. Again, not a good trade location. Not a good trade location. Speaking of the border of this trading range, well, I would say that it's close to the top. It's close to the top, unlike euro yen, for example, which had already broken it. So currently we might have some potential for the price to test this level, and that's whether it breaks or not. So let's see. Okay. So for today, for example, if you find a good trade location, if you find a good entry, something like that, I think might be possible. So for day trading, well, it's incredibly difficult to predict the intraday prices. Incredibly difficult, because otherwise, otherwise we would all know exactly the track of the price. That nobody knows that. But so if you catch something here, for example, so I think that you have a decent chance of the price driving higher towards 195, for example, but that's questionable if it continues to move up or not. That's very questionable. So I will read chat for a little bit, guys. Ghana is with us. Hello. Aliyu. Quant Hustle. How often do you do live analysis? Great information. Thank you very much. We do it every Tuesday. Every Tuesday the same time. Here on this channel of Exness. What's your take on GBP USD and American dollar index? All right, so give me just a sec. I will proceed to these charts too. All right, as I've said, the American dollar index this week is probably bullish. is probably bullish because it's recovering, because geopolitical premiums and risk premiums are being eliminated from the market. So usually that supports the US dollar. GBP USD has been trending, but currently it's been pushed down by the strength of the American dollar. And we see this narrative. We see the yields going up, the yields of bonds are going up. At the same time, of course, UK bond yields are also moving up, so it's balancing the situation to some extent. So I think that it's rather balanced than necessarily decline, because I was considering buying American dollar versus yen, for example. But against the British pound, that's questionable, I think. That's questionable, and it's at the bottom of the Bollinger Bands. So I think that driving down would be probably pretty difficult here to continue to drive down. So I think we have a decent situation. So it had tested the previous intermediate term low, this low. So now it's recovery, the first day of recovery. So if this day closes in the green, I mean in the bullish, so next day might be potentially the retracement to the 20-day moving average. So I think that's absolutely possible, given that both GBP and DXY are moving up actually. DXY moving up, I mean against the euro, so that's interesting if it will continue going up or not. So I think that yeah, we have some pressure to the upside. Maybe today we'll close in one color, who knows that, but if not, if the price will close down here, maybe some correction is expected here. Some correction might be expected. That depends on today's publication, guys. So because we don't yet know the number will be probably strong, 0.3%. So, but it's already discounted in the price action. So a little bit of tightness is already priced in the market. So I don't think the market will become even tighter than that. If inflation will be greater than anticipated, of course we'll have it skyrocketing. We'll have the big bar going up. But I don't think it will happen. So probably inflation will stay at the same level. Inflation rate of 0.3% will probably stay on the course. All right. So what else I think is interesting this week? So we've seen the big rally on Bitcoin. We've seen the big rally on Bitcoin. So it had reached the peak, and we see that currently it struggles to maintain growth. And I think that cryptocurrencies this week might be under pressure, and I will explain you my logic why I think that's going to happen. So specifically for Bitcoin, I don't think it's going to necessarily drop. Yeah, it can't sustain to move through the level of 104. So you see that the price action is pretty, so it shows some resistance. The price action is pretty tough here. It's pretty tight. A bunch of liquidation levels are projected to the downside, so it's standing right at the peak. So it struggles to maintain the growth at the top of the Bollinger Bands here, so which is 2 standard deviations from the 20-day moving average. So I think that, so as you see when exactly this market had started to grow, it had started to grow when the first rumors about the potential trade deal had started to circulate in the market. So people started to talk about the potential agreement between between China and the US, and the market started to pump. Now the news was already published yesterday on Monday. So China and the US, they have negotiated about the 90 days delay of the tariffs. So buy the news, sell the rumor, or buy the rumors or sell the news, guys, right? Do you remember the old adage? Buy the rumors, sell the news. So this is the development of the narrative, and here is the end of the narrative. Here is the potential end of the narrative. So I think with that we will have substantially less buyers going on here. So for that purpose, if you want to analyze Bitcoin, for example, so the best source which you can go is the CoinGlass. Is CoinGlass, I think that's a very good website, so because it aggregates a lot of interesting information. So for cryptocurrencies, what we want to see here, if we go to spot for Bitcoin, and the first thing I want to see is the inflows to the exchanges. So whenever it reaches the peak, the new peak, I see this chart of BTC spot inflows / outflows. So whenever I have the big spikes to the upside, that means that that people start getting their bitcoins back on the exchange, probably to sell it. Not necessarily immediately, but you see that when the market is close to the peak, so they're transferring the large amount of bitcoins back to the exchange. Well, that might not be the end, but you see that worked like that in the past. Here and here and here exactly there was a peak, right? And a lot of bitcoins were transferred to the exchange. Now we don't have the situation yet. What about ETH? Well, here we don't have yet any particular situation. We did have some potential or substantial inflow of ETH to the exchanges. Probably that might have that was the result of people wanting to sell their ETH in order to buy some other cryptocurrencies. So that might be, so at the beginning of the rally, that means that they sell some of their cryptos in order to purchase something else. Currently we don't observe this pattern yet, so they don't move their ETH back to exchanges in order to sell them, even though the price is pretty high. So that means that the market probably had stabilized here. It's stabilized, even though in the short term the small correction for Bitcoin and ETH, it's absolutely possible, because the narrative is over. As you see, the narrative that was driving this market is probably over, and I see pretty tidy consolidation here right at the peak. So you see small candlesticks, dodgy bars appearing right at the peak. So I think that if you catch the bullish trap of some kind, you might potentially get a pretty decent trade, a pretty interesting trade here. How exactly would that happen? For example, so you see that this is a problematic area. I call it a problematic area, where the market cannot, or probably will fail to go against this level. So for example, you got a new peak again, and market might break and immediately go down. So that might be the scenario of a potential bullish trap here. Okay, so be careful with that. So it doesn't happen it doesn't happen very frequently, but in case you have the breakout to the upside, everybody will start thinking, okay, we gotta buy some ETH, buy some more, right? You don't have to be emotional here. You have to be prepared. You have to do your homework. And as you've done your homework, you see all of a sudden, okay, wait a minute. So where are we located in terms of the daily structure? We are located right at the peak of the 2 standard deviations. So that's a problematic area. If you take a look at the history, if you take a look back at the history, you see that many times, oftentimes after the big run to such an area, market was retracing. Well, not every time, of course, because there are some times the market was growing, right? But in many cases, in 7 cases out of 10, the market was retracing out of this area. And you see, okay, wait a minute. So will this time market break, or will it stay within? So if you calculate the odds, the odds are 70% on our side if we play on the short side. Okay, and you say, all right, so I'm comfortable with odds, but I don't like the idea of selling into the rally, right? So instead, you might want to wait until some kind of confirmation, maybe candlestick pattern or anything else. So maybe you will wait until this fails. You will switch to another time frame, to the lower time frame. You might enter the position there. And if the trade works, you will see the immediate continuation to the downside. The immediate continuations. That might be the asymmetrical trading opportunity that you might want to capture out of the market. So that would be my probably take on ETH. So why ETH and not Bitcoin? So why I'm not thinking of shorting Bitcoin? So the reason is very simple. Just if we go to TradingView, for example, build a spread between Bitcoin and ETH, you will see that this spread was located at the bottom 1 day ago. So you see where it's locating? So it's locating right at the bottom. So Bitcoin was oversold heavily against ETH for maybe 4 weeks in a row, right? So if I would choose what to buy here, what to sell, I would definitely stick to Bitcoin to buy or to hold. And ETH might be the candidate for selling here, because you see that it's heavily oversold. It's heavily over. That's a spread, guys. That's not a trading instrument. That's a spread between Bitcoin and ETH. Bitcoin/ETH, right? So if it retraces back, so Bitcoin can stay at this level and ETH may fall, for example. That is the most common situation. By the way, you can use the spread logic for example, buying Bitcoin. So when the spread reaches here, reaches this point, that's a good point of trying to buy more of Bitcoin. Reaches this point, good opportunity to buy more of Bitcoin in comparison to anything else, right? And we are again in this situation back. We are back again in this situation. Well, of course, that was associated with some kind of altcoin rally, right? ETH is higher, so everything else is peaking, but you gotta be careful about that. You gotta be careful because this indicator is heavily below the watermark, below the threshold. So here below the 20-day Bollinger, and it might retrace back to the average if the rally stops. I don't see any big volumes, any substantial volumes in the market, I mean in crypto market, so I don't see any FOMO. I don't see any euphoria, so the volatility is not yet very big. Just take a look at what's going on with volatility. Volatility, I mean, in terms of ATR, it's pretty low. It's not that high, meaning that the emotions of the market are still pretty at a low level. So that's not an emotional rally yet. Well, that might be good in the beginning of the trend, right? So volatility should be low. That should be low, but usually it should not be that low. And well, that might be low actually. So let's see where it leads. So I will be very patient, very cautiously waiting for upside breakouts here. And if it fails, I will probably be positioning to the short side. Well, of course, with very big cautiousness, because still there's this huge breakout, big breakout, associated with some volumes. And of course, if it sustains, if it goes up, it might be pretty aggressive. But I don't think it will happen right from this group of levels. I think if it goes, it will need probably first to correct a little bit, and after that to go up. So after correction, yes, I would be totally on the long side here, but here at this spot right above the Bollinger Bands, so I'll be probably selling. Okay, guys, reading your comments on YouTube. Let's switch to read your comments. Yes, CPI today, guys. CPI today. Don't forget about that. CPI is very important. Alua is from New Delhi, India, is with us. Yeah, exactly. I remember. All right, so yeah, we don't have yet questions, then we'll proceed with the streaming. So we got more 15 minutes, we can go through other instruments. We got S&P 500, NASDAQ to watch. We got some currency pairs, cross pairs. Let's continue, let's move on. All right, so for cryptos, I think that's some kind of opportunity. Not huge maybe, but might be a short-term opportunity. Yesterday I've taken some short position on one of cryptos. It was BNB coin. It's not tradable on Exness, but in Exness we have Bitcoin and ETH, which are biggest ones. So I think that if you trade currencies, commodities, so Bitcoin and ETH might be enough for you. So if you don't want to dive deeper into the cryptocurrencies, so it might be absolutely enough to use Bitcoin and ETH. All right, so other than that, let's switch to the stock market, US 500. US 500, as you see, it was pretty optimistic this week, since the beginning of the week. So it was going up. S&P 500 is feeling pretty well. And what has changed here is the parameters of market sentiment. So let's go to CNN's Fear and Greed Index here and see what has changed here. We are in the greed territory, so that's the market, guys. A week ago we've been in the fear territory. 2 weeks ago we've been in extreme fear territory. Now we're in a greed territory. So that's how market operates. That's all you need to know about markets. So it just fluctuates between different polar states. What is in fear? Market momentum is still in fear, so it's still touching the 125 days moving average. So it's closing, it's touching it. So there is no guarantee that it will necessarily break it, but it's time. It's touching this level. When the S&P 500 is above its moving or rolling average or the prior 125 trading days, that's a sign of positive momentum. If the index is below this average, it shows investors are getting skittish. So currently, yes, it's below, it's not yet above, so it's just touching, it's trying to touch it and hold above. So let's observe if it succeeds or not. Strength is relatively good, right? Almost all stocks are moving up. Big stocks are moving up. Breadth is improving, so many sectors, all sectors are moving up simultaneously. What is happening with volatility? Volatility is neutral, but I would say bullish because VIX is 18. So that's not bearish at all. So I would say this is bullish. Safe haven demand is extreme greed because, yeah, safe haven is actually no longer the preferred trade, right? So this is associated with bonds. But the same situation stands for the yen, for Swiss franc, for even gold. Even gold, as you see. So demand for safe havens was very, very high in the first quarter of this year, but now that's no longer the case. Junk bond demand also is in extreme greed territory. All right, so market feels well, pretty well, but let's see what exactly we can do in this market. So jumping at the peak is not a good idea, as you already know, because the potential might be pretty limited. So in other words, it touches the high, stands here with dodgy bars, then corrects down. So for example, that might be the potential behavior. All right, now let's try to build here two major references. The first is a 200-day moving average. Price is going above, okay? It's going above, it's testing this level. So that's a go, no-go situation, meaning that the downtrend is, the fate of the downtrend is determining right now whether the price will be ready to hold above and stay above this level, or whether it will trigger down with a big bar down and will continue moving down, something like that. Just let's take a look at the previous situations when the market was doing just the same, exactly the same. Well, I think let's watch TradingView, so they have had more history here, the more depth of history that we need to have. For that purpose, we use SPY, which is the ETF from SPDR. That's the S&P 500 Index ETF. So let's put here 200-day moving average. So that's exactly what we see right now. The price is above on the pre-market. And for example, bullish. So what we want to see here, the bearish markets of, I don't know, when the volatility was first peaking, then it was declining. So there are a bunch of situations of comebacks when the market was retracing, holding above, then retesting this level back again and initiating the uptrend. The same situation was after COVID in 2020. Markets was referring back to this level, initiating the rally, testing it back again, and the same situation. Alright, so that was a different situation in August 2022 when the market was trying to touch this level several times, but usually market stays with this area at least for a while. Alright, so currently I think that that's a good benchmark. I mean that if the price might continue going up, then it might continue going down, so that might act as a support or a resistance for some period of time. Currently, I think that, so I don't have any bias on S&P 500 or Nasdaq specifically. I don't have any bias, so yeah, I think that's an important level to watch. The Nasdaq and S&P, they're testing important levels to watch. But there is some chance, of course, that it will continue going up. So because this level is pretty strong, so that's psychological level, because if it breaks, if it holds, if the market doesn't go below 20,500, below this level, so for the market that would be an indication that we are back actually, so the market can, I don't say it will easily reach the previous peak, but at least it might try to. So your trade location, your potential trade location might be somewhere around here. Around this level, probably. You see this big bar? So usually the beginning of the bar might serve as a potential tipping point or the reference point. So if the price holds, if it doesn't go down, so that might be a potential point of entry in the upside direction. I don't think that it will be huge trend, maybe several days, something like that. But that's my take on what's going on in the market. I think that market sentiment has improved substantially, so we can totally think about longs here. What's my take about German index? So DE30, right? So which is DAX. New peak, right? DAX is peaking, that's in a new peak. I personally prefer to stick to S&Ps because it was oversold previously and it's recovering, it's getting back, or Nasdaq, it's getting back. Because in trading, so you should probably sell something that has already peaking or has already peaked, and to buy something that was undervalued in this particular situation. So in our particular situation, American market was undervalued in the first quarter and in the part of the second quarter, so now it's regaining momentum back again. On the contrary, at the same time, German index DAX was beating S&Ps and beating Nasdaq in the first quarter of 2025. So it was opening the year in the green. So currently some kind of rotation might happen. So if you want to be ahead of the game, not behind of the game, so you want to stick to something that regains momentum back again, but not on something that is already outdated. So I think that DAX is outdated because it is already, so just take a look. Let's put here, by the way, the spread between DAX and S&Ps. Okay, DAX versus SPY. Here is a spread, okay? Well, currently we don't see any dominance of one versus another. They're kind of in the middle. But but I think that S&Ps has some room to drive this spread down, actually. Something like that. Okay. Previously that was a tipping point for S&P. And DAX, as you see that the behavior of DAX, the dynamics is DAX in comparison to S&P, it's moving down. The spread is moving down. Down several days, right? It's going down several days. So the trend, the short-term trend is that S&P is starting to accelerate faster than DAX. So I think you should use this situation. Even greater situation is visible for Nasdaq. You see that the more the more aggressive trend here is for Nasdaq. So Nasdaq is driving DAX down. I mean, it's outpacing DAX. It's outpacing DAX. Currently, that's not a big issue. That's not a huge issue, right? But it's still far from the bottom of this spread. It's still far. When it will be here, I think you should stick back to DAX, something like that, and DAX should accelerate the momentum. Something like that. Alright, guys, we have some time for questions. 5 minutes for questions. Let's go through chat. How does CPI affect gold? Alright, very good question. So first of all, CPI doesn't affect gold directly, but it affects the American dollar, expectations of the US dollar. In other words, so strong CPI usually leads to the tighter expectations about the monetary policy. Yields of bonds are usually starting to grow. Probabilities of interest rate hikes starting to grow. Well, that might not be this time because they are already growing. But usually strong inflation leads to the expected strength of the monetary policy, and by that it supports the US dollar. Usually US dollar competes with gold, so they have negative correlation with gold. In normal markets, rising American dollar and rising inflation should pressure gold, but not in this market, because in this market gold has been serving as an inflation protection, geopolitical hedge, hedge against everything. Hedge against sell American narrative, so gold was purchased massively, just massively. And that's why I don't think that strong CPI would affect gold in this case. The reaction might be quite the opposite this time. So gold has the strong internal driver of growth right now, so I don't think it influences, it's being influenced right now by any other markets that directly in comparison like it was in the past. Just let's take a look quickly at barchart.com so you will see what I'm talking about. So if you go to futures here, futures section,